services. The creation of the nationwide digital infrastructure allied with new tools and technologies, which is what we hear almost every day, AI, ML, big data, so on and so forth, has started to galvanize various sectors to improve the well-being of every Indian, ranging from agriculture to natural resource management to transportation to health and so much more, which is what we are going to be putting on the table over the next couple of hours. Our objective today is to return actionable recommendations to include the access to entitlements, banking, payments, credit, markets, and development opportunities, and indeed, the most important part, the place of women in this. Let me have the pleasure of introducing our panelists. Mr. Rakesh Kaul, leader, Government and Public Sector, Markets and Healthcare, ENY, with 25 years of diverse experience of large-scale transformation at federal and state level. Ms. Shinjini Kumar, co-founder of SALT, which is a fintech platform with the aim to close the gender gap in finance. She has spent more than 3 decades in senior roles in leading financial institutions, including RBI, Bank of America, Merrill Lynch, PwC, Paytm, Citibank. Dr. Jayashree Vyas, Managing Director of Shri Mahila Seva Sahakari Bank, has been leading since 1986, been a long time, which has actually helped more than 500,000 women clients. Despite the crisis that the country faced even during last 2 years, she has led it from the front and continued to help the women in distress. The biggest example of women empowerment from the perspective of livelihood linkages and financial inclusion. We're also joined by Mr. Abhishek Singh, who is the President, NEGD, and CEO of Digital India Corporation, as well as MyGov. Having diverse experience in administration, managing law and order, implementing development programs and policy formulation with the use of technology towards improving governance. Dr. Dipali Panjoshi, Distinguished Fellow, Scotch Development Foundation and former ED, RBI, with 36 years of experience having served the central bank and a development economist. Mr. J. Vidyasagar Reddy, who is the Chief Executive Officer, Real-Time Governance Society, managing CM Dashboard as well from the government of Andhra Pradesh, earlier IT advisor to the state government, MBA from Georgia State University and civil engineering from Texas. He brings with him over 25 years of industry experience. We're joined by Mr. Akhilesh Tuteja, who is Global Head, Cybersecurity Consulting and India Head, Digital Consulting at KPMG, having developed the firm's cybersecurity business, partnering with more than 50 countries by designing innovative solutions to help clients improve business resiliency and risk management. Dr. Subi Chaturvedi, Distinguished Public Policy Professional and Chair, CAII Committee on Creator Experience, Economy and Gaming, over 2 decades of experience as a strategic advisor and corporate affairs and communications expert. She has been at the front and center of some of the most pressing development debates of the time. Mr. Neil Ratan, domain expert and former regional managing partner at PwC. Over 27 years of experience, having served clients across the areas of innovative technology-oriented initiatives for government, strategy, process reforms, capacity building of complex projects in more than 15 countries across regions. Mr. Sharat Sharma, co-founder, iSpurt Foundation, one of the active technology angel investors and a passionate evangelist of the software product ecosystem. Co-founder and governing council member of iSpurt, and he was the chair of NASSCOM Product Forum and a member of the Executive Council 2009 to 13. Mr. Sayedin Abbasi, Additional Chief Secretary from Water Resources Department. This is only one of the departments. He is also in charge of public health engineering, responsible for implementation of Jal Jeevan Mission in the state, which has made tremendous progress. He's also handling IT, science and technology, food, civil supply, and consumer affairs departments. And ladies and gentlemen, let me now introduce Mr. Samir Kochar, Chairman, Scotch Group, reforms historian and author of several volumes, including Speeding Financial Inclusion. Then these were published in 2009, followed by Defeating Poverty, which was published in 2014, followed by Digital India, Developed India, Modi's Odyssey. Digital India, in fact, returned a number of actionable recommendations, including digital health records, connected government, and extinguishing cash, which RBI is now in the process of working out at CBDC, as CBDC. With this, let me now invite Mr. Kochar for his opening comments and then moderate the panel.
Thank you, Gulsharan. Since this is a very savvy panel, I would not go into too much of detail, but let me just very quickly recap. I think one of the most seminal works in the area of inclusion was, Rangarajan Committee report, out of which came the entire financial inclusion roadmap. It was fairly long time back, and even then and today, I find that this entire understanding of the word inclusion and inclusive growth leaves a lot to be desired. We've always held that inclusive growth stands on three pillars: digital inclusion, social inclusion, and financial inclusion. Now, there have been various progresses made, initiatives taken in all three areas, but not at the same speed. So, there's a coordination failure, so to say, that is happening. And that's the reason why you find that the inequities are going up if you look at the recent reports. The biggest challenge we've always faced is inclusion of convenience. People do not understand what the meaning of the word is. People don't understand what financial inclusion means, or what social inclusion or digital. So you actually have to battle the mindsets. So much so, I recall that many years back when, Dr. Rangarajan was chairing one of our conferences, and we had Raghuram Rajan, who was not then the governor RBI, but he was the economic advisor to the finance minister. And he said, and he argued that, financial inclusion to his mind means availability of consumer credit to the poor. And actually, Dr. Rangarajan had to correct him on the stage, saying that, no, it is not about consumer credit, it is about livelihood linkage. And that, thing kind of continued. After that, one agenda after the other has been top-fitted, retrofitted on financial inclusion. So you had these technology wallas who came out with this differentiated banking concept at RBI with Raghuram Rajan again at the helm, and he talked about payments bank and savings bank and this bank and that bank in a country which is, so low on banks that, you don't even have one banking service provider, forget, getting 4 of them in a village. And no wonder, even that time I had, at the risk of displeasing a lot of people, I had said this payments bank will fail. And, that is kind of coming true, because they have no case, they have no use case to exist. After that, a lot of ground has been covered. And today we have a financial inclusion index that has served the purpose of, let's say, very wide availability of financial services, payment services, etc., to the masses. But I think the financial inclusion index itself needs to be revisited, because it looks at only the very limited supply side issues. There are no demand side issues that it looks at. It doesn't look at credit. It doesn't look at livelihood. It doesn't look at socio-economic development as parameters. In fact, availability of credit is maybe a very fraction percentage of what the financial inclusion index constitutes. So one of the recommendations that I would certainly like to make is that we have to look at and revisit the financial inclusion index itself. We very carefully chosen this panel. There are people who've done outstanding work in entitlement delivery. There are people who've done outstanding work in access to banking and payments. The people who are doing seminal work in access to development opportunities. And recently, somebody who started looking at it from the prism of women and access to market. So as I said, the progress everywhere has been varied. Some has been very good, some has been not so good. And while we deep dive into this discussion, first of all, I'd like to call upon Subhi Chaturvedi, who is also chairing our committee in CII. Subhi, to your mind, what is inclusion today? What does India need the most? And so when we say digital transformation and inclusive growth, what does that mean in today's context?
Samir, thank you so much. And I'm really honored and deeply humbled to sort of set the stage and open the debate. I've been a proponent and one of the strongest cheerleaders of Digital India. This is not new to us as a construct. Let's remember that from the 1990s to the early 2000s, we've dabbled in more than created infrastructure. We've tried to enable an ecosystem and we've prepped the runway. When 2013 happened, that's when real transformation started unfolding. One of the biggest projects that I've been a huge votary of is the BharatNet project, where we talk about covering all of our 600,000 villages and 250,000 village panchayats. I was fortunate enough to set the context and open the Government of India panel at the United Nations Internet Governance Forum, where we first launched and celebrated Digital India. Digital India for us is very different from, let's say, a Startup India or Make in India. For the first time, Sameer, India is leading the narrative at a global stage, where through our Aadhaar program, where we are second to none, through our OpenStack program, through the kind of interventions that we've made across digital infrastructure, across digital capacity building, across ensuring that you're building essential services for a developing country and emerging economy like India to come on board. And you've hit the nail on the head. What does it really mean for, let's say, people or citizens or industry as a whole? And I'm sure we're going to deep dive and revisit, but the idea of inclusion, fortunately or unfortunately, is only looked at from a financial lens. When we start looking at the fourth D in Digital India, and that's where digital transformation really starts happening, is the idea of democratizing innovation, the idea of democratizing the engagement that citizens can have with the state. So the very construct of not just having a representative democracy, but having a participatory democracy, where you don't just vote and you're not just done with it for the next 5 years. That's a very popular regimen that local groups sort of tend to use, and they say, "Aapki sarkar, aapka paisa, aapka hisab." It's what you do after technology and infrastructure has been set up. And you mentioned access to markets. The questions that we've been asking, whether as industry or whether that's people from media, academia, or civil societies, who is in the room and whose voices are left out. In the process, let us not forget to celebrate the good that has happened. And I'm truly delighted to see Abhishek ji on the panel, and I'm sure he'll speak more to that. There is a lot that we need to celebrate. So for the first time, as a very proud Indian, we were at the global stage and we were talking about what is right that has happened. And let's look at now, what can we build upon? What is at stake? So McKinsey says by 2025, we're looking at 60 million new jobs, which can be created just in the experience or creator economy. We're looking at billions of dollars of investments that are looking at new and emerging tech-based economies, which do not require very heavy amounts of investments, which do not require sorting out or rejigging of labor codes. And this is especially important in the context of the new emerging geopolitical situation. So for the first time, we have the opportunity where you do not need a long gestation period, where you can truly create an inclusive and a representative India, where inclusion, I have a slight, love and hate relationship with the word inclusion. It sounds like an afterthought. And this is where policy, which is truly bottom up, where you do public policy after public consultation, where you include voices from the public and you make public policy for public interest. And that is what we've seen happening. So if you'll remember, after 3 to 4 national telecom policies, you finally have a national converged or a national communication digital policy. Just as the Nobel Peace Prize may not always celebrate the best person in the room, but you end up putting the spotlight on the right issue. And if we can get to the right questions where industry, academia, and the government look at not just solving for the now, but start future-proofing for industries of tomorrow, where when we talk about open data and open governance structures, and we were fortunate enough to pull out one of the first reports with METI.
Thank you very much. No, that's actually a mouthful. It's
sure,
pretty broad. So let me jump on to Mr. Abbasi. Abbasi ji, you have been involved with this Digital India since the very beginning. And, we've been talking about participatory democracy and connectivity and this, that, and the other ever since. And I recall that, we had organized with your help this conference called Northeast at Work. And for the first time, we had talked about, what inclusion means, availability of credit. We had also returned a recommendation. I think that was way back in 2006, that let's fight this not for profit mindset, where, everyone says that if you're doing inclusion, it should be not for profit. And we returned a recommendation that CSCs be allowed as business correspondents, banking correspondents. Let corporates be, let it be. Enlightened self-interest is best that you can deal with. And that, I'm glad, is a recommendation that got accepted. And of course, you've had worn so many hats, and you've gone forward. And one of the areas that we find in digital transformation is that the entitlement delivery and governance transformation is taking place at a remarkable pace. So, specifically being from the Northeast and Assam, where do you think we are today, and what is the possible way forward?
Thank you. First of all, I apologize to all the participants here. There was some kind of a technical glitch on account of which I could not join smoothly in the beginning. I see a lot of familiar faces. I see Abhishek, Mr. Neil Ratan. We worked initially in the good old days in 2005-6 when the e-governance program was being launched under Mr. Chandrasekhar. So it is good to see a lot of old people here. I missed out a little bit on the initial part, but I would just like to come in on what is happening in Assam. But for a bit of a background, I mean, today everybody's talking about digital transformation, and particularly after the sort of post-COVID world, I mean, online is the way to go. A lot of transactions, something you would not dream of doing, online. A lot of people are doing. The financial inclusion has grown enormously on account of the kind of problems we faced during COVID. Now, in Assam, if you want to look at it, if you want to talk about digital transformation, and especially in terms of financial inclusion, etc., first is of course the infrastructure itself. Now, if you look at infrastructure, I mean the data is a little old, 2018-19, but if you look at internet penetration amongst men in Assam, surprisingly, it is the internet penetration for men in Assam is one of the lowest in the country. It was at about 42 point some odd percent. Smartphone usage again is low. It is at about 21, 22 odd percent. So that is something which is worrying for the state as a whole, because ultimately, if you want people to transact online, if you want people to get on board, etc., mobile, smartphones, etc., would be an integral part of it. There is a lot which the government of India is doing in terms of BharatNet, etc., for better internet penetration, better mobile penetration, but we still have some way to go as far as that is concerned. Now, coming to the financial inclusion part, if you look at the growth of the sort of CD, deposit growth, I mean, there was a study which was done for a period of 2007-8 to 2017-18, and a lot of the increases happened actually in the last 3-4 years, that is from 2014 to 18. Deposit in Assam grew by 15.18% during this period, and credit grew by 30.78%. Whereas in the country as a whole, it was in the 13 odd percent range. I mean, for the country as a whole. The CD ratio also moved up from 0.11 to 0.44, which, I mean, of course, is still lower than the national average, but it is still far better than what it was earlier. So on this side, there has been especially in the last 5-7 years, there has been a lot of growth in the economy. And I'm not talking about digital right now, but just in the economy, which has allowed all this to happen. So there's a lot of activity happening in the Northeast, a lot of investment happening from the government as well as the private sector, which has made the Northeast as well as Assam a very exciting place to be in. So that is one part. Another part, in terms of the government doing digital inclusion, ultimately will be Aadhaar, and that will be there for the financial inclusion part, the DBT and the financial benefits and so on, where we again were a bit of a late mover, and that had nothing to do with the state had nothing to do with the Northeast, but rather which was peculiar to Assam, this whole question of the NRC, etc., as a result of which the Supreme Court said, no, you hang on till for the NRC, etc. right now, and you do it a little later. Thankfully, right now the NRC, sort of the Aadhaar distribution today in Assam is at about 83%. We moved rather quickly in the last 1 year. It's about 83% in spite of COVID and so on and so forth. We have another 7% for whom the data has been collected, but there is still another 7-8% on which no decision has been taken. These are the sort of the people who came in the doubtful category, etc., as to whether they will be issued Aadhaar cards or not issued Aadhaar cards is a question which ultimately will be decided by the Supreme Court, and that is something on which the state can't do anything. However, their digital data has been captured. So, I mean, one way or the other, once the decision goes, that has been captured. And of course, there's another 4 to 5% in the 0 to 5 years, which is starting now. So, if you look at data capture, it's almost there, 95%, 94, 95%, and 5% balance are remaining. Now, coming to the financial inclusion part, and this is something which is the vision of our chief minister also. And when he was finance minister, he was talking about this. So this is not something new. We have launched something which is the Arunodaya scheme in the last government, where about 20 lakh women are being given 1,000 rupees per month directly into their accounts. And these are the most vulnerable people, widows, old women, and so on and so forth, who've been getting this money directly into their accounts. We have a lot of social welfare schemes going on, a lot of benefits accruing to the tea garden tribals, to schemes from labor and employment and so on. Currently, now the state is working on something which is called the DIB scheme, which is the Direct Benefit Infrastructure Scheme. Idea basically that we're talking about is that we will have one platform through which all this money will be routed, whether it is money, benefits which are accruing for the social welfare schemes, for tea garden tribals, for widows, for old age pensions, and so on and so forth, a whole host of social welfare schemes. All this will happen through one common platform with one common identifier, which is the Aadhaar card. We are looking that by the end probably of, this financial year or the beginning of the next financial year, this infrastructure will be in place. We will have an Aadhaar user agency here in the state, which will be authenticating all these transactions, which will help us to identify beneficiaries better across the spectrum. So if somebody is getting money under the Arunodaya scheme, also under the old age pension scheme, also under the tea garden tribal scheme, so what is his sort of financial status as per data, what are the kind of benefits that he or she is getting, is something that will be looked at by us very closely. A lot apart from the leakages which will be sort of plugged, the more exciting thing is that, and this was the vision of the chief minister, instead of for example, social welfare, the money will come in 3 months, and then at one shot 3 months money is given to somebody. Some other scheme happens twice a year, some other scheme happens maybe once a year, or so on. We will be able to calculate, for example, that okay, the total benefit which would accrue to a person is X over the period of 1 year, etc. So can we sort of guarantee that on a monthly basis we give him or her this kind of money on a monthly basis, and fine, we adjust it as and when the money from the government of India comes, etc. So that gives a lot of financial security to the most vulnerable people in the state. So that is something that we are working on, and that is something which is really very, very exciting. Another thing which has happened is, and this has again on account largely, I would say, of COVID, but this was also booming, is online, transactions, these these Bheem and RuPay and so on and so forth, that has also ballooned significantly in the state. So these are two areas where a lot of work is happening. I think that probably from a government perspective and from a governance perspective, the direct benefit infrastructure work that we will be doing will have, I mean, I think, I don't know whether any other state in the country is doing it, but it is being sort of run from the finance department, and all the other departments are sort of coming on board as far as this is concerned. This is something which will be able to, transform at least the way, benefits are distributed in the state as a whole.
That's
That is
very
one thing
refreshing and wonderful to hear, Abhishek. In fact, I had made a recommendation a couple of years back when we looked at very low utilization of Jan Dhan accounts. I had said that, so much of thing you mandated is going to Jan Dhan account. So why don't you just mandate that the DBT and all that money will go only to Jan Dhan? And against this kind of a calculation that in year how much benefit goes, can there be an individual OD given to that person? So that kind of, within a banking system creates a window for doing what you are exactly planning to do, that you adjust the money later.
Right.
However, the caveat here is that you must charge a rate of interest, however low or insignificant, because then that will get into a bad kick habit, and make sure that, the money is not ill spent. So that was one of the recommendations, and I'm very happy to see that you are thinking of and moving at that direction. So the story at Assam, which is, one of the tail end states historically, is that back end, you are saying digitalization is, the infrastructure is being built at a rapid pace. You are looking at building databases, and that work is going to be pretty much on track. At the front end, internet penetration and digitalization is a cause of concern. And you are also looking at doing better targeted subsidy management and maybe giving better cash flow management to your citizens. In a nutshell, that is what you have probably
Correct.
told us is the situation in Assam. Moving on to Abhishek ji. Abhishek ji, what is the big thing that's happening at the center in terms of inclusive growth and digital transformation? I think you're on mute.
Sorry. Yeah, thanks, Samir. And it's indeed a stellar panel of speakers today. And I look forward to hearing from all of them with regard to getting insights with regard to how digital transformation can enable inclusive growth. And picking up from what Abhishek sir has just mentioned, if we look at the story of digital transformation in the last, since the launch of the National E-Governance Plan, followed by the Digital India program, and especially in the last 2 years, since the pandemic struck in March 2020, and after that, we have been seeing a remarkable adoption of digital transformation across sectors. And it has directly resulted in inclusive growth in every way, which way we can think. Whether it's adoption of technologies for education, remote learning, or for healthcare, or for working, for even continuing business as usual, whether in the government or in the private sector, or the growth of the e-commerce and the unicorns that we are seeing every day, all of them are relying on digital technologies. And the advantage that we had was that we had built a firm foundation of of building blocks, which has helped us in leverage the investments made in the technology, especially with regard to the Aadhaar project, or the UPI, or the DigiLocker, or the connectivity that has been established, or the network of common service centers which have been established, which is ensuring that while we adopt digital technologies and take up digital transformation in many sectors, we do not create digital haves and digital have-nots. Because the nature of digital technology is that once you do that, unless you address the basic challenge of access, the problem will remain. So right from the genesis of the e-governance story in India, the common service centers was a part and parcel of the plan, which ensured that digital access is provided to those people who do not have either a device or connectivity or the skills to use technology for accessing any services. Today, we have a network of 400,000 common service centers which are accessing services across the country, and which are ensuring that more and more people in the rural areas or in the remote areas are able to access public services or other business services which are available electronically. But that's only a small part of the story. Ultimately, if we have to really benefit from the power of technology, we have to ensure that every person gets access to high-speed internet. And towards that objective, the BharatNet project, as we all know, is trying to connect all 600,000 villages across our country with high-speed fiber-based network. And your Ghar Ghar fiber, that objective is there, that would ensure that every person, whichever part of the country he is able to access e-services for healthcare, for education, for e-commerce, or for skilling or for any other financial services which are being made available electronically. When we do that, we have to remember that when we design systems, we have to think of designing it in an inclusive manner. An example that I would give is the vaccination platform that was designed recently and launched and become one of the most robust such systems across the country. While designing it, the objective of making it inclusive was right from day one. And that's why it was ensured that even people who did not have a device or who could not have connectivity, they could also register on the system. They could also get their certificates electronically and ensure that they have access to public places, travel, or just going around by getting their certificates verified. The other aspects when we do that, when we look at inclusive growth, there have been studies which show that whichever countries have adopted digital technologies in big way, it has led to a significant increase in GDPs. There have been studies by MIT, there have been studies by Harvard, which has looked at to adopt the pace of adoption of mobile technologies, mobile internet, or just expansion of fiber, which has led to increase in the net national income, which has led to people benefiting across the country, making development more inclusive and more equitable. Over and above, what we need to focus now is that apart from just providing connectivity and providing access to low-cost devices, which more and more people can use for accessing services, how do we ensure that people are skilled in using e-services? Because if e-commerce is booming and people who are aware of how technology is used for increasing volumes of sales, how can we provide the same services to, say, a weaver or an artisan or a handicraft person who has skills of making his products, but in order to access markets, how do we enable him? How do we give him skills so that he also benefits from them? How do we provide these technologies to farmers so that they can access markets? E-Naam has been there for ensuring that mandi prices are made available, but we need to walk the last mile and ensure that farmers are actually benefiting from that. And when the farmers and the artisans, the craftsmen, they become part of the internet economy, the impact on the economic growth will be significant and substantial. Then the other aspect that we have seen with regard to adoption of digital technologies is the impact of women in the workforce. What we observed is that when we use, for example, technology like work from home, again an example from our own team that we observed, and this is true in many IT sector industries, like when we adopted work from home, we found that more and more women could take up jobs working remotely without having the pressure to manage both family and work. And in fact, one particular case was very remarkable in which one of our team members who was working on a very important IT project, she did not opt for maternity leave because she said that why should I miss out on a very important part when the project is under development? And she could continue to work remotely with video conferencing tools, with GitHub, with OpenForge. So this also shows how technology enables more gender equity, more involvement of women in the workforce, and ensuring that more and more people get into the whole economic story. And this has a direct impact. If more people get involved in doing work by using digital technologies, it will have a significant impact on economic growth, and it will make growth more inclusive and ensure that every segment of the society, women included, get benefit from that. The other impact that we see of adoption of digital technologies is with regard to differently enabled people. Today, technology allows access to services for people who are having learning disabilities, for people who have other handicaps that are there. They are able to access services and they are able to do their jobs in a much more better way. That is why the entire effort is there of not only making services and making portals and making apps and making services more accessible, but also using technology to enable people who are differently enabled or are ADHD, have ADHD or autism or any other learning disabilities, access knowledge, access services, access information, which otherwise were not possible. So that also ensures that a very important segment of the society also gets onboarded in the digital transformation story. Then the other part is that we always say that we have almost 700 billion plus people on the internet economy in India, but there are 500 million more people to be onboarded. And to do that, we need to use language technologies and ensure that more and more services are available in Indian languages, which will ensure people to be able to access services which are not there today. And once we do that, once language enablement is there, then anybody will be able to transact with anyone without the barriers of language. And that will again have a great impact of ensuring inclusive growth. That will ensure that people from all parts of the country get involved in the entire economic story and would contribute to the economic growth by using digital technologies. And the next frontier, of course, on which we are working on will be voice. Because in the next 3 to 5 years, I feel that more and more services, whether government services or business services, will be available through the voice interface. And once that happens, then the entire barrier of people not having the skills or ability to navigate a portal or to use an app, that will be transcended. And that would allow people to be able to talk to a device in the language of his choice, ask for any service, and get the information on their phone in their native language. So imagine a farmer asking their phone, can you tell me the mandi price of bajra ke daam kya hai aaj mandi mein? Aur wo device bata dega. So that would be the real transformative thing. If we can ask for, listen to songs and do other services on Alexas and Siris, there is no reason that cannot be enabled. We are already working on the Umang platform for enabling AI-based chatbot and voicebot services. And we hope that in the next 3 to 6 months, we will be able to offer these services. And that would ensure that more and more people across the country get onboarded, access services, and that would lead to their empowerment and getting services. Similarly, like the impact.
I'll stop you here for a minute. Dipali ji, if you're there, question to you. Now, what Abhishek ji just told us that there is lots and lots of stuff that has happened on access, and it's actually quite visible over the past 20 years. Huge amount of infrastructure has been built, hardware infrastructure has been built, connectivity has been built, a lot of building blocks, which are population scale, have been built. Aadhaar was a case in point. Now, but in terms of financial inclusion, which is your subject, the hypothesis always was that if you do all these digital things, financial inclusion will improve and therefore poverty alleviation would happen. Because to my mind, the only benchmark of inclusive growth is that has the poverty elevation happening or not happening? Are people moving up the economic ladder or they are not moving up the economic ladder? So where are we on financial inclusion? And you're on mute, I think. You'll have to unmute yourself.
There are a lot of skeptics who would say, and they have, before I go into the salient features of their arguments, because they say that these are band-aids and leaky buckets and nothing has happened to the poor. And I have titled what I want to say, India Development Participation in Evidence-Based Policy. So let me begin by defining digital financial inclusion. It involves the deployment of cost-saving digital means to reach currently financially excluded and underserved populations with a range of financial services suited to their needs that are responsibly delivered at a cost which is affordable to customers and sustainable for providers. So I'm also going to be speaking of the business case for financial inclusion. Now, there we are, of course, at the cusp of a new revolution, and we have to evaluate the risks and rewards of that new era. There is a great promise of technological innovation in finance. There are substantial efficiency gains. There is a gender focus, but there are also downside risks which we cannot downplay. There are online frauds. There is a compromise of customer credentials, which is a distinct possibility. Data privacy is required. And I recommend to everybody a serial called Jam Tara, which tells you how easily you can be fooled. The UNCTAD report of 2019 was very amusing because it said that developing nations like China and India would be left behind. But if you look at how quickly the poor adapt, because they have no other means of access, then you will realize that that was just an alarmist report. Another favorite story which I have is of an American mother in the 50s telling her daughter that eat up your food, or because there's a girl who's starving in India. And now the same mother, 3 years, 30 years later says, eat up your food because there's a tech-savvy girl in India coming to take your job away. So this is how far we've really moved. Now, India has introduced wide-ranging and impressive reforms in the financial sector in recent years, and the rise of fintech marked a watershed with the Jam Trinity and the Jan Dhan accounts, which have a built-in insurance cover, a RuPay card, an overdraft facility. So the effort appears to be to deepen the reach of the financial system, ensuring growth with equity as an essential component of the push to exponential economic growth, ensuring wider access and participation of all in the fruits of development, because financial services like deposit accounts, savings, credit, insurance, money remittances are often unavailable to low-income households, underserved populations, undeveloped regions. And where they are available to the poor leverage their social capital. They borrow from the informal market at prohibitive cost. So digital financial inclusion initiatives and fintech imperatives make direct contribution to better developmental outcomes for low-income households, regions, and economies. So, there are a lot of critics, but digital innovation enables the ability to process a large number of databases, and everyone has been talking about the pandemic. Let me go on a different tack. Let me tell you on a balance of consideration what needs to be done going forward. I argue quite simply that financial inclusion and its adjacencies, the digital changes have greatly improved the soundness and depth of the financial system and led to an impressive growth in the country's financial resources. Yet, of course, much more needs to be done to ensure the efficient allocation of these resources to finance the higher level of investments which are going to be necessary for sustained economic growth and poverty reduction across large swathes of the country, its underserved and unserved populations, and economically weaker sectors, sections, geographical regions. Of course, there is a gender focus and the benefits. You see, we all saw in the pandemic that benefits were delivered into the Jan Dhan accounts of the women-headed households. And the RBI has made digital financial inclusion a major objective. And like the government, it is an explicit policy goal. My argument is that banking services are in the nature of a public good. And therefore, it is imperative to make available banking and payment services to the entire population without discrimination. Financial exclusion signifies lack of access by certain segments of society. It is the opposite, that low-cost, fair, and safe financial products and services are made available to the unserved, and digital financial inclusion, because it has by its very nature great efficiencies, enables you to do this. However, as you are well aware, you've been in the forefront of this revolution. You have been having conferences which I have been participating in since the year 2005. And you know that the basic banking deposit did not require a mandatory threshold level balance. No minimum balance, no charges.
Sorry, Dipali, this I'll have to intervene, because all this is very well known to all of us. Let me just move on to Jayashree Vyasji. All this, I'll come back to you.
Agency model. You see,
I'll just come back to you. See, these models are very well understood. And Jayashree, they have been on the ground since 2005. And, but there is no credit. I'm just saying that where is the credit? Are you seeing credit going up? Are you seeing jobs going up? Are you seeing livelihood opportunities going up? Or these are still palliatives? Because I said the basic thing is everyone defines financial inclusion or inclusive growth as per their convenience. Whatever is easy to achieve, just say, okay, let's open a bank account. If you open a 1 lakh bank account, financial inclusion tick mark. So many UPI transactions, financial inclusion tick mark. So many CSCs, financial inclusion tick mark. But what is the ground reality? Are there jobs? Is there credit? Are MSMEs getting money? I can tell you there's such deep distress in all these things. Why is no one talking about that?
Yeah, well, as you know, we are working in a bank where all women are self-employed and they are working in the informal sector. So they're not, they don't need big credit, but from beginning, they didn't have access to money, and they had to, because they were economically active, they had to take it from money lenders. But that's a long story. But the point is that, yes, I would say that, they have improved. Say from first they were doing job work, from job work to own business because they have some working capital. Then they are involving their family members also into their whatever business. It could be food processing, it could be any other and then it is now we are also seeing some women are entrepreneurs. I'm not saying they have gone till enterprises, but at least some the entrepreneurs, but at least they are employing people. But I'm not going long into this. But when we are talking about financial inclusion, we always, from the beginning, we realized that there is a need for financial inclusion, but it has to be meaningful and it has to be sustainable. And that's what we started working on it. But what we were seeing was that women also, they wanted credit because they were economically active and they always wanted working capital. They wanted to leave, get back the money lenders' money. So that was happening. But what we really wanted was that how can we help them to even get into different types of products. The saving is, of course, not very big service, but they were saving also small amounts. They were saving, but it was more for a rainy day. So they will deposit one day and then in 2 days they will withdraw. So it was not a real saving accounts. The second thing was insurance. They had never thought about it. We designed all those products, even pension also we designed, but we were seeing that nobody, many, very small number of women were really using it. So we tried to understand that why this is happening, and we did some kind of financial behavior research survey, I would say small survey, and we found that the first thing is that because they are living on day-to-day basis and earning on day-to-day basis, they were always they're just thinking about today. They're not thinking about tomorrow also. Our first project was tomorrow. Okay, think about tomorrow. The second thing was that because they're not having money, then they would, whenever they wanted money, they would go to money lender or they would go to even microfinance organization. But that was happening. And the third thing which was there was that for any kind of life cycle need, whether it is sickness, whether they want to buy a machine, whether there is a there's a marriage in the family, they were using only one product, and that was credit. They were not using saving because they're not saving so much. They were not using insurance because they didn't even know about it. And pension, it was a long story. So then this is what we started, financial literacy program. I'll not go much into the details of it, but this was something that in financial literacy we talked about planning and other things, and they really now started understanding all these things. But now I'll come to digitalization. In 2013, there's a RuPay card started coming in, and we also wanted to have it, and then we started providing it to women. Of course, they didn't understand how to use it and everything. That was we had to help them in this. But immediately after that, demonetization came, and this was the time when I would always say that crisis always helped in digitalization. So what happened was that they had this RuPay card, and we were also helping them how to use it. So they started using. First thing was that they started using that RuPay card, and that was that because they could go to any ATM, and then they could withdraw it. So this was the time when they were very happy that doorstep they didn't have to come to bank. That from doorstep they were giving this taking this money. But the thing was that the three things happened. Why they liked this was the first thing was that because the majority of them are doing work manually, and they had to walk so much, and they needed transportation and other things. So they saw that now our time is saving. We are able to save our time, and then they can use it for other businesses. The second thing which was there was that as Dipali ji also said, that cost was very low. And the third one, which was very important, was they were feeling that it was their self-confidence they were getting because they are illiterate, but they are able to do this. So then that became that became that yes, self-confidence, and that was very important. This is what we saw, that they started, not only that they started using it, they were also telling it to others also, and they were even giving them learning about how to do it. So that was the first beginning. The second thing, it's not digital, but I would say, is that all people had to bring Aadhaar card, and nobody had, many few people had Aadhaar card. But because it was demonetization, they had to withdraw money. They could not withdraw money because unless they have Aadhaar card. So now everybody, 100% people have Aadhaar card. So that was also one benefit which we saw. But the other thing which I would say is that, it was RuPay card. We were just testing that online transactions can happen on this or not. We are ourselves also not, we didn't know that, is it possible? So we were testing. And the next day, it was demonetization day. Next day, we saw that in our accounts, 1,000 transactions came through online. They were all illiterate women, I would say. And then we saw that, half of it was, 1/3 of it was for medicines and hospitals. Somebody was in hospital. Second was that, they wanted to buy food grains for that. And the third was that, they wanted petrol. I don't know, because they had scooters or whatever. So that's what we saw, that, that they were, I would say they were very smart. They just went to the wherever place and they just used it. So this is something I would say that, this is what we have seen, that they are very smart. If we give them any kind of tool, they would use it, and they would, once they understand that, yes, it is helping us, then they would definitely use it more and more. But then thereafter, of course, we, and I would always say that, we always wanted this. So then we started going on and on and on, SMS, that, your balance, you don't have to come to see your balance. So those small things, those kinds of things we were doing. But then later on, we had, we have now come up to UPI. And so now all this, majority of women are also doing, UPI. So IMPS, first it was IMPS, but it was, the kind of trainings which we have to give is very important. And handholding support is also important. This is what two things which we have seen. And many things, they don't understand, or they understand, but they just ignore. One thing is that in RuPay card, we definitely told them that just don't give PIN number and don't give your card to anybody, even to your family members. But majority of them were giving to their husband or son. So this kept on happening. But we saw that maybe it is a family, so it became a family card instead of, just individual card. This was something which we also could not do anything about it. But fortunately, it's not fortunate, but during digital, this COVID, 2 years COVID, again, this same thing happened, but it was much better. The first thing was that because we already had UPI and we already had IMPS and UPI, and they had not learned it. So the first thing we did it that, and also there was the World Bank which had given us some training, that is fintech training was going on there. So we gave these trainings to them virtually. It was very difficult because they had small mobile and how to do it. And so we were also trying, but they had to do it from their home. So
I'll just pause you for a moment, because, you've made some very important points. You're essentially your success story. The point that stays with me is the thing that you said, that they were only using credit, because that was possible earlier. And then, once they did that, and then they become from one person to an SHG, and they become, kind of a group. And there today, some of them are even employing people, and, maybe very odd cases, they become like an enterprise as well. So it's been a very gradual journey of development, which is the story. But, that's one Seva bank. There are very few stories like that where you do that kind of hand holding and, you kind of up. So Sharad, you are the disruptive guy here. If credit is the starting point, why don't we, airdrop credit here? I mean, how do we make sure that anybody who wants credit and is worthy of getting credit gets the gram credit? So everything else is secondary, isn't it?
Yeah. So I think we have to see this in the context of arc of history. Some of the stuff that has happened in the past is quite significant. Abhishek ji talked about it, and we had other people also, Syed ji and others talking about it, and many of the colleagues on the panel have been intimately involved in this. But coming specifically to credit, I think the mega shift that is taking place in credit is moving from physical collateral to information collateral. For that to happen, for information collateral to be used for credit, you have to give short tenor, short amount loans. So if you have to give short tenor, short amount loans, the cost of giving a loan has to come down. So a lot of the early stages of India Stack, which is eKYC, e-sign, DigiLocker, have been really to make that friction of giving a loan, reducing the friction of giving the loan. But the second thing that needed to fall in place was that you have to actually, for information collateral to work, information has to flow from one place to the other, from the borrower to the lender, in a way where that the high provenance of the data is maintained. That system has come into play only on 2nd September this year. It's called the Account Aggregator system. Some of you may have been following this. It was launched on 2nd September. It's been growing since then at 28% week on week. All consent transactions that have happened have been related to credit, all of them, all 100% of them. So this is the building block that had to fall in place. Till that building block is in place, things would not happen. If GPS was not in place, Uber would not have happened. If account aggregator is not in place, information collateral based cash flow lending will not happen. So I think therefore, why was it that getting movement of data is much more complex than moving money? And considering that UPI is 5 years old, what is the difference? So there are two things I think we must appreciate about what is happening here, and I'll be rather quick in explaining this. One is moving money. India has embraced a multi-party, an open multi-party model. So if I had to send, let's say, money to you, Samir, 100 rupees, and pre-UPI, I would have gone to Paytm. I would have debited my wallet, credited your wallet. They would have informed you one-party transaction. Both of us are talking to Paytm. Today, when you do it with, let's say, UPI, I go to PhonePe. PhonePe has a sponsor bank. It's ICICI Bank now, used to be Yes Bank earlier. It has to talk to my debiting bank account, let's say SBI, your crediting bank account, let's say HDFC and NPCI, 5 parties. Now, how is it that a 5-party system is outperforming a single party system on experience, on reliability, and on security? This has not been in the history of Indian systems before. In fact, if many of you use iPhone, Apple as a company is based on the idea that a single party system will outperform a 5-party system. So this is a controversial idea. India managed to pull this off, even if I say so myself, because of a well-designed protocol behind UPI. Now, however, hold this thought for a moment. When I send that 100 rupees to you, let us say your banker messes it up and tomorrow morning says, "Are wo 100 rupees mil nahi raha." That's not my problem. That is now your problem because the money was sent to you. It is with you. But when I send you data, I am a small business. I have, for cash flow lending, sent you my last 3 invoices or perhaps the last invoice. It has the pricing information, sensitive pricing information. That is, I don't want my competitors to know. And you don't handle as my lender that data very well and you leak it. It's got very big consequences for me. Now, in the West, you can enforce good behavior on the part of people by threatening to sue them, saying, "Aapne nahi kiya, hum aapko sue kar denge, you'll go out of business." So good behavior is ensured by the regulatory system, by the court system, by the tort system. In India, if I threaten to sue you, what difference does it make to you? You'll say the case will run for 10 years. I'm not scared. It doesn't matter to me. So India had to find a way to enforce good behavior around data in technology, in code, not in courts. And that system has gone live and is growing well. So we are now at the cusp of this. So this system is in trials with GEM. And, we celebrated when Ugrow Capital gave a loan of 238 rupees. And I remember many of us called Ugrow and we said 238, 58-day loan for 238 rupees. They said, no, we did our calculations. We're going to make money on a 238 rupee loan. Then it became a 217 rupee loan. Yes, last week, one of the big primary banks, one of the top banks of India, gave a 160 rupee loan for 57 days. So we are beginning to see the outline of a new system that is beginning to come in. And India is very early. In fact, India is one of the first countries. The country that does it reasonably well is, believe it or not, is a system called NAFIN in Mexico. Colombia does it well. But I think the Indian system will outscale all of these in the coming 1 year. So to get there, to get to this, some of you have seen iSpirit's famous 2013-2014 slide called the Rajni slide, which is to be able to give an intraday loan on the phone, to a street vendor called Rajni, right? And I see Rakesh smiling because I know and many of you have seen that slide. That slide has a circle. It has taken many, many systems to be built to get to a point where that would become possible. We are still not able to do it for Rajni. We are still able to do it only for GST paying businesses. I think we're still 2 years away from Rajni. So these are long plays. These are not short plays. This requires a whole ecosystem building that needs to happen. And as a country, we have to learn a new set of skills. One skill that we had to learn was how to do Aadhaar World, which is a platform that, literally millions and millions of people can use it in a day. Then we had to learn multi-party protocol. Now we have to learn what is techno-legal regulation. So these are all lessons that are being learned. And on the back of this, you will see a new wave of credit coming, which I think will be coming in the year.
There's a question to you, Sharad. You've talked about this Rajni use case, and you've talked about this 248 rupee loan. The hot topic today is this crypto and all these crypto slush funds. I mean, there are trillions of dollars all over the place. Now, how can you make it useful and productive? Although I hate the whole idea of crypto, how can you use and tap into some of that money and give credit to the poor?
See, I think at some point in time when the system takes off, the projections are that we will be short of wholesale capital. So various people have made projections. The MSME committee headed by UK Sinha made a projection that we'll do about 20 lakh crores in the next 5 years of this type of cash flow lending I've told you. Credit Suisse, Ashish Gupta has made a projection of 17 lakh crores. If we reach anywhere near that number, right? Keep in mind our MFI is roughly about 3 to 4 lakh crores, right? So if we reach anywhere near that number, we'll have to unlock pools of wholesale capital. Today, this is not a problem because the system is in its infancy. It is very, very early days. Nothing of like that is happening. But in the future, we will have to unlock new pools of wholesale capital. There are 2 pools of wholesale capital that have to be unlocked. One is actually the mutual fund itself, and there is considerable work taking place to make that happen. And the second is to tap into the digital assets with crypto that are there. If you go to the iSpirit blog, you will see there is a description of a project called Project Sakhi, which is to bring whole digital assets into the gift city. And then it gets put on to these new rails, which are called the Open Rails, Open Credit Enablement Network. And the system will flow. We don't need it for a year or so because there's no pressure on wholesale capital till then. But at some point in the future, if the system succeeds, and we have to plan for success, then wholesale capital will be new pools of wholesale capital will be needed. And that is when this will really become important. Today, there is no shortage of wholesale capital at the small scale the system is running right now.
So thank you very much. With that, I come to Vidyasagarji. So we've kind of dealt a little bit of detail on the credit aspect of things, and you are one state which has done this digital transformation exceedingly well to govern better. What are the next steps that you are looking at? I mean, so when you say govern better, I think your entitlement delivery is super fantastic. Your identification of citizens is very good. Your targeted subsidy delivery is very good. But where do we go from here? How do you make sure that you are using all of this for, let's say, socio-economic development of Andhra Pradesh and speeding that up?
Sure. Good evening, Samirji, and greetings to the fellow distinguished panelists. What we are trying to do here is measure the performance so we can improve what we have been doing and see where we go from here. So as you're aware, what's measured can be improved, selecting the proper KPIs, monitoring the performance, getting the feedback loop to check what's happening and to correct if there are any issues and to improve the programs. The goal is to perform real-time governance, and the approach that we use is data-driven decision making. So the information is the lifeblood for programs, which whether they are welfare programs or growth-oriented programs or anything that the state government is doing. So there's every government has humongous amounts of data, and no difference in AP. We are leveraging the data to see what is happening. For example, we have household data on approximately 1.5 to 1.6 crore households within the state. That's almost everyone. Then the 5+ crore population are members of these households. So every household, there is information on who lives there and what's the relationship within the household. Some of the discussions earlier, we understood about the welfare scheme beneficiaries. So for example, in AP state, I can look at a particular household in a remote village, understand this household has 5 members. Here are the people, and this is the amount of benefits they have received over the last 2 years across the board for all the platforms, because the benefit management is happening through a single comprehensive financial platform. So knowing that I have given this much, but the government, to the members of the household, gives us the basic data on who are the beneficiaries now. So the analysis then goes into what percentage of people are getting benefits and where the benefits are accruing mostly, and if there is any distribution that is not aligned with the distribution of poverty or needy people or tribal people. However we want to look at the data and the metrics, we are able to do all those things. For example, if a particular district in our state has X percentage of tribal population, and if we are giving benefits to this population under a particular scheme, is the communities. So this kind of looking at what we have and where we are going with that, then what is the next step? So how can we leverage that? Recently, as we know AP is one of the highest catchment areas for IT skills. So because the companies are mostly located in large cities, AP students upon graduation or AP skilled workers upon acquiring their skills are hired and they move out of our state to some of these large cities. Because of COVID, we have found out that work from home has been accepted. What used to be a huge security issue or risk averse behavior from companies, during the last 1 to 2 years, they have accepted that risk. So over 1 lakh, the number varies. We think it's between 1 lakh and 2 lakhs. People have come back home to their villages and towns in Andhra Pradesh, and they're working from home. So an initiative from AP government is, let's make them stay, not all of them maybe, but 30-40% of them stay back permanently and work from their hometowns. To make this happen, not all of these people would have working offices like how we do here to be able to comfortably and effectively work from homes. So provide co-working office space and at a minimum cost to either the individuals or the companies. And they can come here close to their native place, don't have to go back to the cities from which they used to work before, and continue to work here. So the win for the employees is they're close to home, the cost of living would be less, they're not spending a lot of time in commute in the cities. For the employers, they don't have to have expensive office space in cities, so they can scale down. For the state, our people are working in our state. Hopefully they'd be spending their money in the state, improving the state economy. So growth is the next area that we are trying to focus. And again, to make this thing inclusive, a lot of our programs, there are 25 to 30 various types of welfare schemes targeted at different demographics in AP. And most of these things involve DBT, direct benefit transfer, based on the Aadhaar numbers. So we have authentic data on the Aadhaar numbers of all of our citizens. And most of these things, some of these schemes are pretty large. Education support for moms to send their kids to school, for example, approximately 50 lakhs mothers are benefiting from that direct benefit scheme. And then backward are underdeveloped women, the Dwakra women's loans and loan repayment schemes, there are 80 lakhs or so. Some of these things may be overlapping, but then if you look at all these things, definitely there is an aggregate of more than 1 crore adults have bank accounts where government is sending money to them. So looking at if these people have bank accounts, then the concept of micro loans, 10,000 rupees up to would be the credit limit. And for micro businesses, the street side vendor or what have you, to make sure that they have access to either zero interest or low interest loans. And it's a revolving credit thing. So they take their 10,000 rupee loan, and if they repay it within certain time, whatever is the credit amount they have left, they can borrow again. So taking information that we have, data on the people, and collecting the data that we have on various schemes, merging all that data into a pretty large data warehouse project that we have, and looking at analytics, who is getting what, is it equitable, is it distributed according to what we know as the population demographics or the target demographics, and then what else can we do to benefit them. So if people are getting this money and we think that they're getting the money because of eligibility criteria, so how can we uplift them? If the criteria is below poverty line, people are getting money based on a certain scheme, how can we uplift them above poverty line? And what schemes can be targeted at these people? So looking at the data we have on our people and targeting them right now for either welfare schemes, and then as we move forward towards the growth, skill development is one, again, low hanging fruit, I would say, because with a not lot of investment, we can improve the skills working with industry and academia to target what are the skills in demand now, and how can we get these skills to the target demographic, either the students or
Thank you,
unemployed
Vidya
youth.
Sagarji.
So
Those are
all this
wonderful
information.
ideas. I'll come back to you about the skill part. But the thing that stays with me on from what you said is this wonderful model of spatially dispersed jobs and spatially dispersed economic growth within the state of Andhra Pradesh, because there's a big amount of district by district disparity also within the states.
Yes.
So there's a spatial disparity there. And that is something that we really, really do need to correct. And that's the root of a lot of law and order and local problems also. So you seem to have figured that one right. With that, I'd like to bring in Akhilesh. So this is one new idea. One new idea was given by Sharad on how to give small ticket loans. The second new idea that has come from Vidya Sagarji is how do you spatially disperse jobs and the economic growth. What do you think we can do bigger and better using all these building blocks that have happened over the past 20 years?
Is that for me, Samir?
Yes, that's for you, Akhilesh.
Okay. You always put me on spot with how do you make those difficult questions all come to me. So clearly there are a number of things which are happening in this world which are making some of these things a lot more accessible, and possibly what we couldn't do earlier, the technology makes it possible. So the first and foremost thing I would say is that the current progress and the future potential of technology gives me huge confidence that the points which I think Dipaliji talked about is how do you create affordability and sustainability, which is both for the provider and receiver happen, I think is likely more possible with today's technology, because technology allows you to continuously expand its capability without having to expand its cost at the same proportion. The second thing is technology does reduce the divides, the barriers. So the accessibility point which you're talking about, so the technology which I use is the same as technology anybody else is using with minor variation. So the ability for everybody to get to the same level is from an accessibility perspective is also very high. The real challenge which we have in today's world is to make sure that it reaches the right people with the right kind of intent, because that's something which in my view is a big challenge. Today it is not happening because we are working on a one-to-many technology initiative, which means that somebody who's to provide and they have to reach out to many. So it's like a one-to-many relationship. I think when you get to the many-to-many, so decentralization delivery model, decentralization access model, and decentralization fulfillment model, in my view, will be one path-breaking initiative in this area. Now, while I'm not a particularly big proponent of blockchain for the sake of blockchain, but I think the technologies like blockchain, which have the ability to inherently work in a decentralized manner and inherently provide trust to both the provider and the user, is one direction which we can go on to. The second area which I think we need to work on, how do we make all of these things available, is how do we create trust in the ecosystem in which we all operate? Because one of the things which, let's say, whatever we do today in the physical world, we trust because that's what we have grown to live with. But when it comes to digital world, when I look at the data, let's say, for example, how hard is it for me to impersonate you? How hard is it for me to poison your data? How hard is it? Actually, these are relatively simple things, and therefore the trust in those systems tend to be rather low. In fact, there's one study which says that the trust in technology is all-time low right now, because we all have been at different points in time either cheated. So again, the earlier speaker talked about Jamtara as one of these famous series and all of that. So we all are in some ways being hit by some of these challenges, and therefore the trust in the technology, trust in ecosystem is low. So how do we build that trust without having to increase the cost of service or cost of access is the second big challenge. There are some good ways by which we can do it. Third, in my view, is reliable artificial intelligence. And I use the word reliable. And reliable to me includes that it should be fair, it should be explainable, and it should deliver the outcome as expected. Because one of the big challenges which you're dealing with AI today is actually AI is not inclusive. And I'm sure you know what I'm talking about. If you today, let's say just a simple search. So if I do a search for shoes on internet, I tend to get to see a lot more men's shoes. But even if Shinjini were to do that search, she will get more men's shoes than women's shoes. Now, that is not a true representation of our world, because first and foremost, the number of women's shoes sold are way more than the number of men's shoes sold. So it doesn't even replicate the market universe. But I think what it does is it skews the vision to what is available for the digital technology to see, which happen to be the more men's shoes than women's shoes. So therefore, the AI or machine learning thing which you're using to solve those two big problems, which is saying availability of credit, it will not be a good answer until we solve the issue of an explainable or a responsible AI. So to me, the third one is that how do we make the AI really powerful enough and inclusive enough for everybody to deal with? And fourth thing for me would be that, when we build newer technology, and some of these newer technologies being built is to make it a lot more easier, accessible. I heard some people talking about how chatbots have been used and all of that. But one of my big challenges is that the chatbots of this world are going to be tomorrow's trouble for us, because they are going to be the channels for impersonation. The concept around deepfake technology and many of these things. So today, when you're talking to a chatbot, how do you ensure that you're talking to the chatbot of a bank, or you're talking to the chatbot of a Jamtara? So those are the kind of challenges which are the fourth dimension for me. So I think there are great promises. The technologies like, as I said, blockchain, like about the artificial intelligence, like a trusted internet can provide, but they all need to be wrapped around with a right lens of creating trust and security within that.
Thank you, Akhilesh. With that, I come to you, Shinjini. What's the problem you are trying to solve? Because we talked a lot of credit, a lot of banking, a lot of technology. No one's talked markets. And markets, as it is in India, are overall very shallow. Forget the participation in women, participation of people itself is very low. And financial literacy, of course, vis-a-vis even simple things like banking is a big challenge. So forget about markets. So why have you conceptualized, a place for women? You are on mute.
Okay. So how much time do I have? 4 minutes, 5 minutes?
Yeah, 4, 5. We'll come back to you also. So you make a couple of points and then we'll come back.
So yeah. So I want to just make sure when we started to think about SALT, we call it SALT.1 because it's a common name. The idea was that despite all these technological advances and digital finance and finance moving largely and a lot of capital flowing into finance, a lot of infrastructure that everybody here is talked about. One of the things that one is not seeing is closing the gender gap. And I just want to make one macro statement before I get on to, because we actually, so I, coming from the background that I come from, you can see these books behind me. My husband's a professor. I think very conceptually before I get down to doing something. So I wanted to actually look at data and, also I've been a central banker. So I guess a lot of that is coded inside me. When I started to look for data about women, their usage of financial products, there's a lot of data about microfinance, because there are a lot of really good studies, and the microfinance industry has really been very good at telling stories. And therefore you get to know a lot about these women. There's also good quality data about, things like Jan Dhan Yojana accounts and the split of women in that and various things. Where we found the data becoming really shallow and almost negligible was the moment you moved up from the women of that microfinance beneficiary strata. Having said that, the gender gap is not correlated to financial disadvantage. The gender gap persists in the wealthiest of families, which again one gets to know because you see how billionaires treat their daughters versus their sons. And then it percolates all the way through to the largest number. Now that segment is where the market lives. That is the segment where the market builds, operates, innovates, puts in capital. That's the largest part of the market. And that's where we saw no data, very, very sketchy, not just quantitative data, not even qualitative research, very little. So we started to talk to women on the one hand, because we wanted to build our own qualitative repository of information. So we spoke to hundreds of women, the founders ourselves, not delegating it to a marketing agency or anything. And that gave us a lot of very quick insights, because that's always one of the good ways to do this. But in addition to that, we also started to talk to other people in the financial services who were willing to talk to us off the record about their experience of building, etc. Many of these people were actually, market leaders in the financial services industry, and they said they had some very, very fascinating insights about why financial services don't get down to women, despite building distribution, despite introducing technology in distribution. One of my asset manager friends said when he asks his distributors this question as to why the number of women that the distributors are selling to is so low, the answer always is that it's easier to sell to men because they know how that works, they have that infrastructure ready, it's easier to access whatever. It's low hanging fruit. I've been a consumer bank head, I've sold financial products, I understand how your channel has been set up. So there's a lot of that legacy factor that helps you push that cart, which is already moving faster and faster, leaving behind people. Now, that's all, unfortunately, something that Mr. Abhishek just talked about. The fintech industry, unfortunately or fortunately, will end up coding that bias and that historical laggard behavior into into their machine learning, into their AI. And therefore, there is no way that this problem will get addressed by itself unless there is active intervention. And that intervention has to take into account and has to, think about design. So basically, SALT is a very design-driven project. It's a technology-driven project, but it's also a very design-driven project. And we are not building for financial inclusion or financial, literacy, because I just feel like that's very patronizing in the context of women, because and that's why we call ourselves SALT, because women have handled money forever. They are very intuitive about how they think about money. They think about money and life together. The financial system has broken that connect. And then we go and become patronizing by telling them, hey, come here and let me teach you what a mutual fund is before you buy mutual fund. So we're not building for education. We're building for action. We're building for women to actually have it in the way that it is easy for them to integrate it with their lives, understand with their life goals, etc. I want to make one very quick point about the macro. A lot of really good stuff that I've learned today. But one thing I've realized is that, there is the gap, the inequality, the idea of people not being given. A lot of people talked about, how the technology we use should be the same as others use, etc. A great example that I always find is, so obviously we live in a realm where there is political scenario, political institutions are dealing with that gap issue. Economic institutions are dealing with, financial institutions are dealing with that gap issue, and social institutions need to be dealing with that gap issue. The interesting thing is, if you think about it, is the feedback mechanism in these is very different in terms of timeliness. So the political system feedback is very, very immediate. So the repercussions, if you don't allow a person to vote, is very, very immediate. The noise is very loud. You immediately hear it. The political system is much more alive to it. And therefore, voting tends to be a very efficient activity. Even when a new technology was introduced in India for voting, it was a tremendous success because it just is a very fast feedback mechanism. Every election, you'll come to know how well you did. There are still inequities there. If you think about how migrants don't get to vote, etc., there are some inequities there, but more or less we have done better. When it comes to economic, again, we talked a lot about the infrastructure that we have built, the DBTs, the ability, wherever there is that loop feedback mechanism, which is very quick, it does tend to pick up. So payments is a very good example. It's a very quick feedback mechanism because I give money to you, you will immediately know whether you got it or not. And we are all more or less on equal terms. Credit, we are not on equal terms. Mutual fund selling, there is the seller side always has a power asymmetry with the buyer side, and therefore the feedback mechanism tends to be slow and inefficient, and yet we keep working at it. The biggest problem is that in the social space, the feedback mechanism is the slowest, and therefore things change the slowest. And that's where the gender gap comes in. And when we think about, one of the things that really enrages me sometimes is this entire infrastructure that we have created of anti-money laundering and the fear of cash and digitization for the purpose of proving a point about digitization. It actually tends to be discriminatory sometimes against women and even men that primarily operate at that level of cash. So how do you make sure that that does not happen? And many people have made this point, and I'm also trying to make, and Jayashree ma'am had some wonderful examples about how that will not happen. And the reason we started to address this issue from the top of the pyramid is because we know that that's where we don't need to, that if you can address this issue with people who have equal access, who already have the smartphones, who already have the Aadhaar cards, who already have everything else, and yet their access to financial products is low, then you can actually begin to design better and better for everybody. So it's not that we don't want to design for the poor. I want to make very quick couple of points. All of us talked about how, going through this experience of COVID will change the world in many ways, flexi timing, more women, a lot more gig economy workers. So financial services cannot continue to live in the euphoric world in which it lives, where it creates products keeping in mind a certain type of a human being, a certain type of a life cycle, because people's lifestyles have completely been disrupted and changed. Just a couple of examples. One, we talked about the AI discriminating on the basis of, codes that already exist. I think that's a very serious issue. Regulators in particular are very comfortable with things that they know, because the trust comes from that, right? Because you trust that a banking system has done something for a very long time, and therefore you kind of give them more power compared to what you give to newer institutions. And sometimes that new institutions, this whole neobank problem, right? The neobanks are supposed to be looking for new business models to answer your question, newer markets, newer type of clients, the ways to reach newer clients. Shudder talks about the whole account aggregator framework, etc. But at the end of the day, if they have to go back and partner with the same banking system, they are actually going to be replicating the risk practices of the banking system that already exists. And this operates at many levels. You hire the same people, you actually go ahead and copy the same policies. Neil is there. I mean, as a consultant, I've always had this. When I went to Paytm to work as a CEO to the bank, this was one of my biggest issues. We were still going to be doing CVS. We were still going to be hiring compliance officers of the same kinds. We were still going to be doing AML, onboarding of the same kind. This whole belief in contract, which is on paper, there are very fundamental things that need to change if we really want to use digitization for the benefit of this very, very large number of people. I'll just give one example before I close, and that is not in financial services, that is across the board. We always talk about more Indians accessing the internet on mobile phone versus on the laptop, right? And we always use that number as a good thing somehow. I got into this project where I wanted to help young girls, get access jobs, etc. So this was just a personal project, and I realized that they all know how to. They all can use their mobiles to access, makeup, Instagram, social, WhatsApp, which are all good things. I don't have a problem with that. I'm not a moral police. But what was very shocking to me was that very few of them knew how to use even basic Excel. Or to create a Word document, or to go on a website and download a form which they could use to apply for a job. Because pretty much most government sites that they were, educational sites that they wanted to use were not optimized for their mobile. And even if they were, the forms are big. It's not convenient to. The mobile is made for entertainment and social. It is not made for, So, and when I compare that to how my children use the internet, it is actually a shame, because our children use the internet to empower themselves with knowledge from across the world. Like one of my children studied in India, another studied in the US. I see zero difference in their knowledge levels, because my child who sits in India accesses the exact same information material, classes happening at Harvard, whatever he wants to, because he knows how to use the internet. He has access to that. When I talk to these kids who have also gone to college, but their primary access to internet is through the mobile, they actually don't. And that's the kind of inequity that I'm talking about. So it's not just enough to create the backend and the product, taking it to the people, design. So for me, if you ask me one thing that we need to address, the answer is design. We don't design for that person who is going to use it. Women tend to be a large part of that person for whom we don't, but there are others. It's not just women. So we decided to start with women. We are not an exclusive platform for women, but we decided to start with women because we realized that that was the largest group of people that we could solve for. But we definitely intend to take that design knowledge and expand it to other groups that tend to not be able to use products that are not designed for them. So sorry.
Thank you so much, Shinjini. Rakesh, she's brought in a good point on design. And Akhilesh also brought in a couple of points, 4 of them, in fact, that he would change. So what would be your top 2 or 3 things that you would like done? Now we're talking future.
Sure. Samir, thank you so much. It's a pleasure to be here. I think I'll just build on what Shinjini was just talking about. I think, and what Sharad also spoke about. First of all, compliments to all of us on the call and all the fraternity, because today we have the confidence to solve our own problems by creating our own solutions. We are no longer looking at outside world to copy paste their solutions and which don't fit our solutions. So great compliments. I think taking a leaf from that and making design as the core issue. I think the program called Diksha is where I think design has been used to the best effect. Today, there have been more than 3 billion learning sessions. No other learning platform in the world can claim anything near this. And one of the key reasons for that success is that it has localized content. It is available in all the languages where it is. In fact, to some extent, even the dialects wherever it is, the content is customized to that extent. So I think today the capacity of the system to think and build design as a key element into the large programs is available. We might have just to extend it to all other programs. And I think UPI again being an example where one could see of how one designed it for scale. And so this also addresses the point which Abhishek ji was raising, which is about the bridging the digital divide caused by language. I think, yes, we must focus on creating more, increase the local language content in our applications. I think in some past studies, we have seen the focus on English and Hindi, but how do we go and create more localized language content is something which we should continue to focus on. I think second point, which Abasi Saab talked about and subsequently Vidya Sagarji talked about, was about was about siloed benefit management systems. Now, at some point in time, with the surveillance systems, with the data that we have, I heard Vidya Sagarji talking about that we have information at a household level. So, can we move from individual benefit management to welfare management of a family, and link it to economic opportunities that can be created? So if we can link this welfare management from this benefit management to a welfare management at a household level is something if we can think of, and link all other programs of opportunity development, creating opportunities, whether it is through entrepreneurship or other kind of things that can be done there, we will be able to lift families out of the difficult areas there. And the KPI perhaps should be that how many families have moved from benefit management and have become independent of the benefit management and are now standing on their own. So can that be a KPI for all the system that is going into creating a system which is monitoring where and how much benefit is giving to what is the outcome we are creating for families to become self-sustainable? I think the third point we talked about somewhere about SMEs. And I think this whole digital enablement, and we are seeing it is very difficult for SMEs to today counter or overcome the barriers that the digital has created. By way of investing in all the kind of technology, they need to be either have a competitive advantage or just to have a presence in that market, right from retail to any other kind of SME we are talking about. So I think this initiative of ONDC, which is trying to create the kind of creating an infrastructure where small entrepreneurs can create their presence at a very small cost. And if we can couple it with what Sharad was saying about flow-based lending and other initiatives like that, I think we will have a set of entrepreneurs who have the basic amenities available to become digital and also have lending available to take it forward. So I think these three in nutshell, if we can move to a welfare-based system at a household level, if we can look at local language content, and if we can at the end look at creating the enablement for SMEs to become digital at a very low cost. And last but not the least, I'll just briefly touch upon that, and I think Abhishek ji talked about it, was to get the holistic impact of digital, we really have to work on the analog part of the system as well. And here, I mean, he talked about that we created a very sound backbone of CSCs to carry the impact of digital into villages and far-flung areas. which was very successful. But I think we still need to continue our focus on the analog part of it, which is creating the right consumer policies, looking at the privacy, looking at security, looking at skill enablement, literacy, as well as digital skill enablement. And all of these areas would be equally important for us to focus along with the deployment of technology and the infrastructure that we are creating. I think those 4 points is something which I would leave for.
Thank you very much. Very important points. And I'm pleased to note what Vidyasagar ji talked about, that they're already looking at family at a unit and, moving at welfare and moving families up the socio-economic status. So perhaps, we should do a case study on that, attempt at the least to do and see what they're doing. Last but not the least, let me come to you, Anil. I was deliberately saving you for the last, because you've practically been the structural engineer for this whole thing that we've had, So what does the edifice look like? I mean, how do we build and what do we build on top of all this?
Thanks a lot, Sameer. And I think it was a real pleasure listening to all the distinguished panelists. And I think as I look forward, 2-3 thoughts which come to my mind. And I think it's, again, we're probably at a very similar juncture we were kind of about 15 years ago when we were doing the National E-Government Plan. That time, the issue we had was that everybody was focusing on the back-end systems of the government, and nobody was worried about the consumer or the citizen. I think the big shift which we did then was to shift government policy of technology towards the benefit of citizens from improving the lives of the government servants. So that was a big shift, if we may so call it. I think Digital India gave it another impetus on technology driving the whole thing forward. In my view, I think barring 1 or 2 areas of Aadhaar and UPI, what we've done is the easy stuff. We managed to do benefits management, we managed to do DBT, we managed to do passports, income tax. I think these are all relatively the easy stuff. I would list 4 big areas where we need to do the real difficult stuff, where I think journeys have started, but still I think the ambition is low. The real ambition is not fully evident, or it's not yet at a irreversible and auto path. In most of the other areas, I think reforms have come to a state that it is on an auto path with enough expertise, enough capability available that we will keep moving forward. And the 4 areas I'd say which need the maximum effort now would be healthcare, education, agriculture, and job/skills. I think these 4 areas need a very big impact. I'll give you an example. When the whole DBT thing was being rolled out, and I think this DigiDhan mission was set up. There was a review meeting which was done with the Prime Minister, and soon after demonetization, and the targets for digital transactions came back from the PM. That was used to be the kind of that's the way the government functions, that a presentation is made that look, this is what we are doing, and a target came back. That target on a 12-month was to grow it 10x. The initial reaction everybody had was, "Galti ho gayi hai, let's go back and correct the target." But obviously that was not the case, and we've all seen the story from there on how the digital transactions have grown, whatever support it has come. But I think in these 4 areas which I've mentioned, a lot of work has started to happen. Abhishek ji spoke about many things. I think COVID is a great example of starting to show how healthcare and digital can kind of coexist for the first time at population scale. But still, I think we ought to realize that in India, if we need to follow Western norms of either education or healthcare, if you want the same teachers to student ratio or the beds to patient ratio, we will never achieve it. We will never achieve it. Far more transformative things have to be done. Far more transformative targets have to get set up. Let's talk about skills and jobs. Today, there are 4 ministries and 35 state governments dealing with this issue, each of them with their own agenda, and all trying their very best. Yet, I think still the extent to which technology has got used is far more can be done. I think just put it very simply there. So one thought I would like to leave. I think I still see Sharad here, a few more, and for this platform to try and push out. How do we create real ambitious targets? What we want to achieve, we will find a way. Do we want to stop healthcare by saying we will have CoWIN as the key platform, or we would really want to see the interoperable platform which we are setting up? And what is this? What is the reform which we are trying to get? At least I, as a student of digital revolution and being studying this, I'm not seeing a very coherent vision being laid out. I think financial inclusion, you spoke about some disparity of definitions. All right, but at least we knew what we were trying to get at. At least we knew that, look, if we got everybody to start to use a bank, and if we got everybody to start to do digital transactions, we will get to credit one day. And the ambition was population scale. The livelihood also will probably move on in that way. But if we, and again, Diksha, Rakesh spoke about Sharad there. I think he's a great platform. 30 billion, if I got the number right, of courses done. Is that still mainstreamed? The pandemic has really accelerated this requirement. Friends, I think I've been doing some work in this area. This country has been very happy in managing the pandemic by saying that, look, we found ways of promoting our children. Children have been promoted from grade A to grade B by doing some test, something, and we think, we've managed the pandemic problem. Practically no child has gone to school. 90% of children in this country, and I'm sticking my neck out when I'm saying that, have not had any learning. Practically any learning in the last 20 odd months in that context. So all this bulk of the children have got promoted, but these last 2 years, learning has not happened. So what is the gap which we will see in years to come because of this mismatch? I think we need to take that learning and change the paradigm of what we want digital in healthcare to do, digital in education to do, digital in jobs to do, and digital in agriculture to do. Because that definition, that plan, I think should be the transformative digital governance plan for the next decade, I would imagine. That would be my dream, my vision. And we've got very capable people, especially healthcare, with somebody like Arish Sharma ji there. I'm sure it'll get there with all the minds there. But let's get to that ambition. And knowing this government, again, if the Prime Minister lays down that ambition, we will have everybody get to that.
God willing, we will. So, Jayashree, when I had stopped you, everybody raised skilling as a big point, and I had stopped you at skilling. So, would you like to share with us what is exactly in skilling that you're doing? You're on mute.
The first thing is also that, we're now 2 generations, almost now 3rd generation also has come in. So when we're talking about, young girls, their ambitions are different. Their skill is good. They are digital savvy. So in that case, you have to find different ways of scaling them up, and they are also very ready to do this. So we have been using many different types of kind of skill building and others that will definitely help them. The middle women are very wise, and what we've been doing is that we are also helping them do different types of skills, and they are very ready to scale up. So they have been doing lots of different types of business. Like if one person was selling bangles, now she is now producing bangles, and now she is now giving employment to 80 people. So those kinds of things also are happening, what we are seeing. But education is something, we are also always wanting them to, because many of them want to become doctors and different types of, and they're going in those areas. So, and they have also graduated in this, and then they want to become entrepreneur, but they want to use technology for this. So we are also trying to work with PSC that, if they can do some kind of some kind of skill building for younger girls. so that, in under the CSR scheme. So this is something, we have been always wanting, that now the third generation of girls, they would never do all this kind of work which other women are doing. So then the mothers are doing. So then, we are also looking that, how can we help them? This is something which is I would say, a challenge for us.
Okay. Thank you very much. Dipali-ji, you had built this wonderful, you are on mute. You had built this wonderful 7-step program for graduating the people out. So if you would like to tell us about the 7th, so having done all of this, what next?
Thank you, Samir Bhai, for remembering that. Yes, indeed, there was a laddered approach which I used to advocate, because the critique, you also talking about credit, disappointingly, because credit is consumption-driven credit, which Rajan was talking about. That is band-aid lending, neither or microcredit. Now, I don't believe that either of these can address developmental outcomes and may indeed worsen the lives of borrowers and their communities. I'm not going into the interest rate issue because I believe in a business case for financial inclusion, which I said. But this credit approach simply relies on microeconomic localized processes and minor interventions. This can never be successful. Therefore, I am a critique of that, and I feel that my laddered approach was nothing. It was simply saying that you should have a script that is savings first, then comes credit. Savings, credit, insurance, pensions, transactions. That was my script for financial inclusion. What I was basically arguing about, and still argue, is that you need right incentive structures. You still need a business case for financial inclusion. It should rest on, DBT. You should embrace digital technology for its swiftness, its speed, its reach. We recognize its ability to change the way financial services are organized and financial products are delivered. Digital financial inclusion just needs 3 things: your digital transaction platform, your retail agent, and a simple device like your mobile phone. And now the RBI is trying to build an app onto any and every phone. So what you need to shed is your subsidy and your targeted lending approach and the premises on which you have been moving all along. That has clearly not worked. So now what you need to do is, instead of subsidy or targeted lending, as Jashiben also says, graduate people and focus on capacity building. And of course, you calibrate policy accordingly to your needs, as somebody very well said. So you need to focus on the market. Now, nobody looks at the market. The market has to be looked at in a commercially viable manner. You have to have a comprehensive, sustainable, scalable new strategy for digital financial inclusion, which will require greater efficiency, innovation, cost effectiveness for public good. So this needs to rest on a business case and to factor in the market. Administration of small loans is indeed costly. Digitization will bring down cost, but only to a limit. Graduating people is expensive, but ultimately necessary if they are to become consumers of goods and producers of goods and services and active players. So if you truly want to broaden access to finance, if you really want growth, you need to build on the lessons of the past. They're not necessarily delivering suboptimal returns, but you have to look at digital financial inclusion beyond NEFT and IMPS, which we are also very excited about. But this will need a change in mindset on the part of your policymakers, practitioners, other stakeholders, and this is the essential challenge for us. I'll sum up by saying that the macroeconomic challenge which confronts policymakers, you and me today, is as we strive to create a more equal and efficient financial system, how do we do this while maintaining financial stability in an increasingly brave new digital world with all the downsides which I mentioned and other people have also stressed. So that's about it for me.
Thank you very much. So you've argued for a business case, and the whole world revolves around that. I think Shinjini had very strongly mentioned that there is a business case he sees at the top end, at the least, if not at the mass scale, will probably be going down. And Sharad, you talked about a mass scale business.
This is going to be about women simply because, people who have never had, kids. There was this whole project of a hole in the wall where somebody just put a computer and watched kids learn from it. So people here in UP learn financial inclusion like they learn Bhojpuri. They use their mobile phones. They're learning to use them. So that's not such a big issue. The poor also have needs. They also know how to meet those needs. The larger issue is how do you protect them from the other issues of identity theft, etc., etc.
Right. Okay. So, Sharad, last question.
Protection
you kind of sat through a very long and very multifaceted kind of a discussion. That possibly what should have been covered in a 2-day conference, we try to do it in 2 hours. Just too many aspects. So, what do you think would be, from your side, some 3-4 key takeaways? What do we say we do next?
Yeah. So clearly, on the governance side, this is something that I think Shinjini alluded to. There is a concept of a short route of accountability and the long route of accountability. The 2004 World Bank report introduced this. It says democracy sometimes has a long route of accountability, which means that if your CGHS system does not give you medicines that they're supposed to give you on time and without any problem, then you can boot out the political person, and this is the long route of accountability. Now we know to some extent the long route of accountability does not work in India, and therefore you have state failures. So the question is, how do you now do supply side reform with a short route of accountability? And something that we haven't covered here, which I can predict with conviction that will be big a year from now, is e-rupee. And e-rupee is going to bring the next generation of reform in DBT. See, what DBT did was it eliminated lots of middlemen in the provision of government services to disadvantaged people. And but supply side reform has not happened. Medicine procurement. When a young woman delivers a baby and the baby is underweight and she is eligible for Poshan Abhiyan, she is supposed to get protein biscuits. Only in a subset of our states, actually the protein biscuits are given to that woman. In other places, the register says they were given, but actually they were not given. So now in those cases, when you are able to equip that woman with a e-rupee voucher where she can go and buy the protein biscuits from a pharmacy, even a private pharmacy, because this is person and purpose dependent, it forces supply side reform. So I think we like many other countries have state failures and market failures. And I think I'm somewhat cautiously optimistic because we are slowly and gradually finding ways to address both types of failures. State failures are getting addressed because of many of these governance issues and digital governance that we talked about. Many of us alluded to that. But we also must recognize that they're market failures. And these market failures, in the absence of a viable contract law, in the absence of good regulation, we need an alternate method of dealing with market failures. So the emergence of self-regulatory organizations like Sahamati, the emergence of being able to enforce good behavior through techno-legal regulation, these are all things that will begin to fix the market failures. And our goal is to continue on these two paths, because we will have to solve for both and get to this quadrant where we reduce both market failures and state failures over time. And I'm cautiously optimistic that this is happening. I wish it was happening faster, but it's nevertheless happening on a very, very sustained pace. And it's a very collaborative exercise. Everybody on the panel here, you had assembled a wonderful panel. Everybody on the panel has chipped in, contributed, brought this to life. This is truly a national project in which many people have contributed. We should stay the course as we move forward.
Thank you, everybody. Thank you so much. I couldn't have myself brought it together so aptly. Thank you, Sharad. Thank you, Shinjini. Thank you, Akhilesh, Rakesh, Vidyasagarji, Neil Ratan, Abhishek ji, who was with us, Abbasi ji, everybody who has been this evening. This is the second last panel of the Public Policy Festival and LITFest. Tomorrow is the last one, which is on institutional failures and rural poverty. Look forward to seeing you all again. Join us. Bye.
Thank you.
Thank you.
Thank you.
Bye.
Thank you for having us all together. Nice seeing all of you.
Thanks.
Take
Same
care.
here. Bye.
Thank you.
Bye.
Thank you so much.
Bye.
Hey, everyone.
Hi, Jayashree ma'am.